What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to be talking about the Bitcoin price chart, along with the altcoin market, and of course, XRP, as volatility strikes the market this week, coming off of yesterday's FOMC meeting, in which Jerome Powell hinted that they are actively searching to begin cutting rates. Yesterday, they did keep rates steady at 525 to 550 basis points, or 5.25 to 5.5%. However, reassuring the market that they are looking to start cutting in September. The market has a 100% probability still that cuts will be coming in September, even after Powell's press conference, with an 86% probability that we see a 0.25% cut and a 13% probability that we see a 0.5% cut. For those who were here during the meeting, because we live streamed those, we saw a tremendous amount of volatility and some trickery take place as the Russell 2000 tried to break out of the 786 Fibonacci retracement level, only for it to take it back once the meeting was over. FOMC weeks are notorious for being incredibly volatile with lots of tricks. However, prices still remain up there at the same place as where they really started the day. So, no clean breakout yet for the Russell. We've talked even a lot about with XRP being that same thing, being tied to that expansionary move happening in mid caps and small caps in the stock market. Even XRP does the same trickery, and this even came before the Russell ended up moving and before the FOMC meeting, only for it to pull back in here, but still holding itself together. Bitcoin, on the other hand, still flashing those signals of what Wyckoff reversals do look like, especially when we look at it from the inverted perspective to kind of make things more clear of what's actually happening in here. Our brains just don't really process it the same way as looking at it from that manner. If you were hoping for up, you can probably see, oh, up, that sounds great. I love up, but invert it back to how it is, right? What do you end up getting? The opposite. So I put out a 39-minute video about this on Bitcoin last week. Still, no evidence to prove that this is going to end up being the case, as one group of people have still not been proven wrong as of yet, and that would be the 4-year cycle theorists. There's still time in this thing, but I would say right now, it's time to prove itself. Yesterday, published a newsletter talking all about that for cycle theory, it actually would need to make itself present in August if we were going to be looking at things from 2017 and 2021 that were consistent for 4-year cycle theory, or if we just want to call it cycle theory, because I don't think it's exactly 4 years, but for cycle theory, August is the big month, not just for Bitcoin, but really for the altcoin market. I won't dive into all of these things all over again when it comes to dominance in Bitcoin and altcoins. You can really just catch that video right back here with the Bitcoin price theory that no one sees and the perfect formula. But if there's one thing that we see consistent throughout previous cycles, whether we're looking at Bitcoin, altcoins, the Bitcoin dominance, the safety trade dominance, or even the altcoin market cap, all of them suggest if cycle theory is going to be consistent with 2017 and 2021, we should start seeing evidence of it beginning next week. And hopefully that is where we actually do see a true move come over here for the Russell. It's not surprising to see a tremendous amount of volatility happening before, during, and after the Fed meeting. We actually talked about this yesterday in Markets in the Morning, that this week will likely be pretty intense. That's today. We'll live stream that. Keep your eyes peeled for it. Expect volatility leading up to it. Expect volatility during it. Expect volatility after it. Expect volatility tomorrow and Friday to try to settle down. And then Monday, fingers crossed, that's it. Let's go. Now, of course, it would have been glorious for us to get our breakout in here, but even like we talked about yesterday, it's not really necessary, and that really it actually seems more like next week is actually the bigger week. That's what we got. We're waiting for the Fed. So one more kind of review. Markets are mixed. Markets are likely going to be volatile today heading into all of this. Get ready for it. I won't have the answers for you for how the market initially reacts to the news. Would it be utterly glorious if we're doing all of this and we're watching the Feds, we're watching Jerome Powell speak, and we see this thing crack through here at the same time? Would that be glorious? Absolutely. But is it like necessary and the detrimental factor of determining our entire future of what's going to happen with crypto and with stocks in the coming weeks and months? I don't think so. I think when we get into August, the month of August is really more of like the big thing. So would have been awesome to put it behind us and for it to already be there, but I don't think it's actually detrimental that we haven't gotten out just yet. Fortunately, we're still kind of holding up here in pre-market before things get going. It's likely, like we said, to still be volatile this week, repositioning happening in markets. But as we can see, before things even open, it's still trying to push its way back up, trying to go for it again. It's likely still going to be like this. And my bet is we still just kind of keep waddling in here for today and also for tomorrow. But what I'm really, really interested in is what happens next week. So we got the retail narrative that we're looking for. The Fed is starting to hint that cuts are going to be coming. We'll see if things can kind of translate into price action come next week. If it does, if we get lucky, if this market starts to end up ripping, we're moving to the upside. And if we do end up kind of seeing that the money printers are turning on, you see retail posting the animations of Jerome Powell shooting money out into the audience and stuff like that. I think there was also some interesting hints to take from what we heard yesterday too. And they gave a clue on why their hand is actually being forced to start cutting. And the reason was not that it was a celebration dance of we've beaten inflation and it's time for us to start cutting because we won, we're glorious, and they did a victory lap about inflation. That's not what happened. The reason that they're needing to start cutting is because unemployment is starting to creep up. And what they don't want to happen is for there to be an uncontrollable spiral of unemployment. So now there's this force going against them. At first, the force was inflation. They didn't have to worry about employment because there was essentially 2 available jobs for every 1 unemployed person. So they could be aggressive with fighting inflation. That is no longer the case anymore. Unemployment is starting to creep up. And now they're reaching a point where they say, okay, that's probably enough of that. We don't want to see that keep going. So maybe we'll start cutting to kind of stop that from spiraling out of control. And so now the cutting has not to do with a victory lap of beating inflation, but it's now going to be about preventing uncontrollable spiraling unemployment. So when you see those money printers being posted all over Twitter, kind of important to understand why are they cutting in the first place. And it's going to be to prevent an uncontrollable spiral of unemployment. But Jerome Powell even mentioned this yesterday in his meeting about looking for different data sets to be able to make a good informed decision on whether or not to be able to cut in September. And then he still did stuff kind of like waddling back and forth of like, we don't know what we're going to do. But the whole thing hinted that it's looking towards unemployment rates. And so one other thing that also points towards, it's like, okay, the market might be waiting for one more thing. It's that the next unemployment reading, it comes out tomorrow. We haven't had an unemployment reading since July 5th. We're going to get an unemployment reading tomorrow. If this thing does 4.1 or 4.2, then employment will continue to creep up higher. Then the market will likely be getting the reassurance it needs that yes, those cuts are coming. The focus is now unemployment. It's nothing new. We've talked about this for several months. Danielle DiMartino Booth had pointed that Jerome Powell's number was like 4% on unemployment was something that would be a determining factor for him. We've now had 2 readings at 4% or above. Tomorrow, if we get another 4%, it's really kind of the nail in the coffin on that the pause cycle is done and the cuts appear to be coming. And so that'll be an interesting dynamic to see the market reaction at that point, because you're going to get kind of 2 things, and it's a weird thing to kind of be in. It's that, all right, what are you cheering for? You're cheering for people to be unemployed in order to get rate cuts, which you perceive to be bullish for the market. I think it's going to be kind of a weird moment in the market at that time because you have 2 kind of mixed things, right? Like good and bad. The first thing was, can you tame inflation by keeping rates high? And the next, it's going to be, can you tame unemployment by reducing rates? The market will be happy that rate cuts have finally started, but then will the market say you're not cutting fast enough? I don't know. That's for a whole different time period. But either way, that's another reason why it's kind of like, hey, next week, maybe the change in topic was definitely around unemployment. We're going to get the monthly unemployment reading tomorrow. Stay tuned. Unfortunately, I will be off tomorrow, so I won't be making a video tomorrow. But of course, I will be actively watching it, and I'll post about it over there on Twitter if something comes from it. But Jerome Powell made it pretty clear Unemployment is now the metric. Inflation seems to have subsided. Tomorrow morning, 1 hour before the market opens, we will get the July unemployment reading, the metric that the Fed is now watching. And we'll see if that's the thing that gets things going tomorrow or on Monday. So I'd expect things to still remain volatile throughout today and tomorrow. It's natural to have volatility after the Fed meeting. But if I had to guess, based on the information that we saw yesterday during that meeting, the narrative has switched over to unemployment versus inflation. And tomorrow morning, we will be getting the unemployment reading. I bet there's a lot of positioning happening right now, preparing for that. And then there'll be a lot of positioning changes after we get the reading. And the big thing to watch will be what occurs next week. So again, for cycle theory, for magical unicorn fairy dust, it all points to next week. What did we just get? We essentially got the most dovish Fed that we've seen. We'll see how that translates into next week's prices. But all right, guys, that'll be it for this one. We have once again survived another Fed week. We won't have one again until September 18th. Till then, hopefully it's a magical ride. But all right, that's going to be it. If you want to check out all the stuff talking about how August answers the question of is cycle theory real, check out the newsletter over here on blockchainbacker.substack.com. It includes a 24-minute audio recording that I personally recorded where I'll read it to you, explain the charts. You get access to all the past newsletters as well with this. Of course, you can check out bcbacker.com for over 40 videos and 11 hours of content teaching you how to set up your own charts and indicators within TradingView and CoinTrader Pro. There's links in the description of this video to bcbacker.com and to the newsletter over there at blockchainbacker.substack.com. Otherwise, I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor, but if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.